Ladies and gentlemen, in this video, we're going to be reviewing the market for today, September 27th, 2024. We're going to be talking about a trade that I took that was not so good. We're going to be reviewing how I determined the bias and how I have been right now on the bias for the third day in a row. So let's talk about what happened. So, from the beginning of the day, I said today was probably going to be a New York manipulation day. Why did I say that? Because we took out this swing high going into this 4-hour key level, this 4-hour fair value gap. At which point we went into this 4-hour fair value gap at market open, and then we started to dump down. So, it led me to believe that the bias was bearish because we had London and London's lows as the drawn liquidity, and then the previous day's lows as this drawn liquidity. The market then proceeded to dump down, but the problem was price action sucked. It sucked so bad. And so when I look at this price action, is this price action that I should have been trading? No. I should not have been trading this price action in the first place. But since I did trade it, we will talk about the trade that I took and why it was not so good. So, you can see this actually is not a breaker block because you have, if I zoom out, you have a high, a low, a lower high, and a lower low. So this is not a breaker block. A breaker block would be a high, a low, a higher high, a lower low. I believe that's correct. High, low, higher high, lower low versus high, low, lower high, lower low. Maybe I marked it wrong, honestly. I could have marked the mitigation block wrong, but the concept applies, right? There's a mitigation block here that price pushed up into. So here you can see price pushed into this mitigation block. This happened after we got a market structure shift. And anyway, then I was simply looking for an inversion fair value gap to go off of this mitigation block. We had this 30-second gap here. It was a little small, not the best fair value gap to take for an inversion. However, I did decide I wanted to take it. But here's my problem with this trade. I was targeting these equal lows to move my stop loss to break even. The candle body instantly fell down to here. And when it fell down here and when it closed, at this point I should not have entered the trade. Because now we are so close to my stop loss to break even target that I'm not going to practically be able to move my stop loss to break even in enough time to where it makes sense for me to be able to move my stop loss to break even. And so now if we had closed up here, it could have been a different story because maybe I could have possibly moved my stop loss to break even here. But even if we closed up here, that's still not a lot of time to move my stop loss to break even. Ideally, I probably should have had my stop loss to break even at a more realistic target for me to have enough time to move my stop loss to break even. I did not have enough time to be able to do so. So I entered this trade, and there were also psychological issues as well, and I'll show you what I mean. I entered this trade. We hit this low, and then I was like, "Oh, we hit it way too fast," and I'm like, not in a situation like my fill was bad. My fill was like down here, so like I was like, shoot, like this isn't good. Like I'll just move my stop loss to break even here. You can't do that. You can't do that, ladies and gentlemen. You cannot do that. So I had to essentially, I should not have entered the trade at all. This was terrible price action, and it was not a good trade because I could not move my stop loss to break even fast enough. So anyway, I had my stop loss to break even right here, and we did not hit it. And we then reversed and went back to the upside and stopped me out. So I was completely right about the bias. We were going into the macro. You can see this was 950 until 1010. So this was going into the macro. We had low resistance liquidity here. In an alternate reality, this trade possibly could have worked out. But there are losses in trading, and this was not a trade I should have taken with this being such bad price action with not being able to move my stop loss to break even in such a short amount of time, with this being such a close by internal low, it just does not make sense. And yeah, just not a trade that I should have taken. And guess what? In the future, this won't have been a loss. So this will have been a no trading type of day. So in general, though, there weren't a ton more trades. If there were, they were mostly losers. You can see we had this inversion here, but this did not hit this internal high. Like this inversion looks okay, but once again, I was bearish bias for the day because I my draw on liquidity was London lows and previous day's low, especially after going into this 4 hour per value gap and then the higher time frame order block mean threshold up there, right? So I was bearish for the day, and the bias ended up playing out. But we had all this chop in here, and this is just not price action you really want to be trading in. It's just not. It's not the best, and you can see why. It's just there's gonna be more losers when you take trades in price action that looks like this. Now you could have taken this trade, and maybe this would have worked out. This one would have possibly worked out, and you could have taken this trade down here at this inversion, and this could have possibly worked out as well. So there were possibly some winners you could have taken, but I happened to take this one, which should have been a winner, but it should have been a break even, but I messed it up. So we're constantly learning, we're constantly getting better, and the draw on liquidity target that I had laid out for London lows was taken. I said this in my live stream. I said that London lows is the draw on liquidity. This seems like where we're going to go, and it was. So I will see you guys in the next one. Hopefully in the future I can just keep getting better at trading with you guys. Until next time.